Good morning, everybody. Thank you so much for joining this morning. We have a rather exciting session about the taxonomy aligning benchmarks with Professor Andreas Hoepner. For those less familiar with Andreas's work, he has been working on financial markets and the EU regulation for many, many years. So his expertise is rather deep. And if you are a keen person who has a LinkedIn profile, I would really suggest linking up with Andreas and at least following his fantastic work and also the very interesting quizzes that he does around the EU regulation for those who are a little bit geekier. So today we will have a short presentation from Andreas who will explain how the tabs work, what their purpose is, and so on. And after that, you have a rather unique opportunity to ask direct questions about the benchmarks and about their use, etc., because Andreas will stay online and answer your questions. To ask a question, you have two options. You can raise your hand as per usual in WebEx, so take your time and find the option. There is a little bit next to your profile where you can raise your hand. Or otherwise, we also have a Q&A option that is embedded in this platform. So if you would like to raise a question, you can either raise your hand or put the question into the Q&A box, and we will address it that way. So without much further delay, the floor is yours, Andreas, and we look forward to hearing more about the tabs.
Thank you very much, Linda. Can I briefly confirm you can see my screen and hear me well?
We can hear you and see you extremely well. Thank you.
Okay, perfect. So thank you very much, everybody, for joining this morning. It's great to see so many people that registered originally. We had over 500, which really is great in terms of interest for the pub. And so what we're essentially doing here is we're presenting the taxonomy-aligning benchmarks with exclusion, TAP-X, and without exclusion, TAP. And we'll explain the taxonomy-aligning benchmarks from the Paris-aligned benchmarks, because essentially it's a smaller sibling to the Paris-aligned and the climate transition benchmarks. It doesn't decarbonize as fast as Paris-aligned and climate transition benchmark, and therefore the taxonomy-aligned benchmarks themselves are only Paris-aligned, tolerating high overshoot, but they do have the additional feature that CAPEX gets included, and therefore we are actually growing taxonomy alignment 5 percentage points per year to 100% green CAPEX, so really greening the economy of tomorrow. So it's a bit of a trade-off than a pure Paris-aligned benchmark. It's a trade-off of greening the economy while decarbonizing at reasonable pace, but maybe not exactly the pace of a PUP or a CTB. And that should allow for quite nice opportunities, especially in the transition space. So let me start from a little bit of history here. So when the Paris-aligned benchmarks were invented, we found a world that only had number one at that point. So in 2018, any kind of climate type benchmark was having relatively lesser emissions than its main benchmark, so MSCI World, FTSE Global, Bloomberg, Barclays, but it didn't actually improve on itself. It was 30% below main benchmark, and it was sitting there. It wasn't actually transitioning anything. Think about people that are looking at a battlefield and they're sitting on the right fence, but they're not actually moving. So the Paris-aligned benchmarks then introduced the features 2, 3, 4, and 5. So reducing your emissions at least 7% year on year, meaning actually walking the walk rather than sitting on the fence and talking the walk. Strictly targeting net zero greenhouse gas emissions by 2050. Fully incorporating Scope 3 greenhouse gas emissions. So Paris-aligned benchmarks have started with mining and extractives in December 2020, put on all Scope 3 of heavy industries in December 2022, and will put on all Scope 3 of everybody, including banks, and including banks category 15, as of December 2024. Then the last point, and that's hugely important given missing data issues, is whenever data has to be estimated because data is missing, it has to be estimated with precautionary principle. That means if in doubt, on the side of the planet, not on the side of commerce. In practice, it simply means those companies that are not willing to report get slightly or somewhat overestimated. Those companies that report poor quality get a little bit or slightly overestimated, and those companies that do report get their reported number taken. But in essence, it is important to create incentives that companies that do not report basically get a worse number than those that do report, otherwise the whole logic of transition does not work. Where do we stand with Paris-aligned benchmarks to date? We have EU SFDR Article 9.3, very much dedicated to Paris-aligned benchmarks. They're over 100 billion, and that was already by last summer. So in essence, that basically is a pretty strong mark. By now, they're over 150 billion. We also have hundreds of indices, ETFs, and even in-house asset owner mandates following Paris-aligned benchmarks. You want a higher volume or lower volume, Linda?
I think if you have headphones, that might help, because there might be a...
I'm on the headphones.
Okay, so that should be fine. I can hear you fine. So
okay.
Maybe if you slightly reduce the volume further, just a little bit, that might help as well. Thank you.
Reduce or increase? I see different comments in the chat. Some people say it's too loud, some people say it's too quiet. Okay, I'll try to moderate, and please just
to be honest, I think most of us can hear you really well. So also there will be a recording, and we can always tweak the sound after that.
Okay, I can confirm I see the chat very well. It's actually pretty good, much better than Teams. So
thank you.
Give me votes, guys. Ask questions up there. I can see that really nicely bumping on the top side.
Yes, and there's also a little Q&A next to the chat. So.
Okay, someone doesn't hear anything, but that's probably not on their side. Okay, so I'll come back to number 3 here and continue. So we have 100 plus indices, ETFs, and in-house mandates. Paris-aligned benchmarks have been used for entirety of liquid assets of AP2. Brunel Pension Fund in the UK has adopted it. The Taiwanese government pension fund has adopted it. New Zealand Super has adopted it. So it's a global thing, not an EU thing. And we're currently at 160 billion already for the concept. And so what do Paris-aligned benchmarks offer? They offer a sufficient financial performance, in particular in return per unit of risk, but basically they perform pretty sound except for the few months where the war started, the invasion, of course, the illegal invasion in Ukraine of Russia, and then we have sufficient greenhouse gas reduction performance as well, so at least 7% per annum. And so that gives us two things: ROI, return on investment, and RIO, real impact outcomes. So conceptually speaking, how do Paris-aligned benchmarks work? We're targeting an actual net zero trajectory that is computed based on the IPCC. So the IPCC has absolute values. We took relative values 7% year on year. Very interestingly, the same IPCC scientists, when they wrote the next UN emissions gap report, they followed our approach and also took relative values. They calculated 7.6% somewhat later in time. But so in essence, it's about reducing year on year with a signature 7% number. And we're following straight away Yuri Regelia et al. 2018. That is the 1.5 degree chapter from the special report. So then what do we look at here? We have two benchmarks. We have one that has exclusions, called the Paris-aligned benchmark, and we have one that does not have exclusions, called the climate transition benchmark. Notably, the actual names were given to us by the European Parliament, so we had no influence on that. But it made sense in the structure that it works. We do have to have a version with and without exclusions, because the market is simply quite divided on the view: would we like to exclude conceptually, or would we like to not exclude, possibly reduce weights, possibly even have zero weights, but not conceptually exclude? In essence, do we leave the door open for fossil fuel firms, or do we not? So 5 building blocks are key. I'll explain them for the Paris-aligned climate transition benchmark, then I'll explain them in the same format for the Taxonomy-aligning benchmark afterwards. So it's crucial to understand how essentially the first main version, Paris and climate transition benchmarks, work, to then see how the TAP and TAPEX work in consequence. So first, we target 1.5 degree with no or limited overshoot. No overshoot in the PAP, possibly limited overshoot in the CTB, the climate transition benchmark. Then we have a relative decarbonization from the start. So compared to the universe, climate transition benchmarks start at -30%, and Paris-aligned benchmarks start at -50%. And that's measured in intensity compared to values, so greenhouse gas emissions divided by EBIC in equities, and in fixed income it could either be absolute emissions or also intensities. Notably speaking, we have received feedback that for some, especially large asset owners, especially in the insurance sector, this could be a bit too steep. So there was definitely feedback to us as, can we please build some kind of a little bit of a step to make it easier to get to this minus 30% rather than having to jump minus 30% straight away. And we have considered that in the taxonomy-aligning benchmarks, which start at plus minus 0%. So you're not allowed to be above benchmark, but neither do you have to start below benchmark. That, of course, means that your actual decarbonization is a lot slower because you're not having an upfront 30%, but it also means that it's much easier to smooth into the taxonomy-aligning benchmarks as a transition benchmark. So then we have the self-decarbonization. This is minus 7% on average per annum for the PABs and for the CTBs until 2050. And we have two provisions to prevent two types of greenwashing. First, in the equity allocation constraint, we ensure that the percentage of heavy assets in a PAB and CTB is the same as it is in the universe. So in essence, if the universe has 55% heavy assets, then the PAB has to have the same. The consequence of that is that decarbonization essentially happens in two groups, one in the heavy assets group and one in the light assets group. So in the heavy assets group, if you're taking money out of the biggest polluters, you're not putting it into a consulting company, you're putting it into an efficient industrial, into an efficient telecoms and so forth. So you put it into an actual, or utilities, you put it into an actual company that is in the so-called heavy industries. And then we have the exclusions. And the exclusions always cause probably the most debate between people because people have strong views on it. So at the moment on the PABs and the CTBs, we have 4 exclusions that have worked fairly well. So coal is excluded above 1% revenue. Oil is excluded above 10% revenue. Gas, electricity produced is excluded above 50%, and inefficient electricity is above 100 grams of CO2 per kilowatt hour. They're also excluded above 50% revenue. So then, actually, before we move to the tabs, are there any immediate questions on the PAB or CTB design? Because if we're losing people here, then we have a problem.
I believe there is one, Andreas. Todor Radostinov asked, how can these PAB or CTB benchmarks be used for Article 9 funds, which only invest in venture capital companies which develop climate tech that is then used to enable emission reductions? But for other companies, if these are only the developers, can it be applicable also to them? You can see the...
Okay, that is a very important question. So I think the assumption here that Article 9 funds only invest in venture capital that develop tech is completely wrong. Article 9.3 is actually written for Paris-aligned benchmarks. So there's 3 types of Article 9 funds. You have Article 9.3, which is Paris-aligned benchmarks and climate transition benchmarks, although climate transition benchmarks need to be careful with the fossil fuels there. But so Article 9 even has a whole article dedicated to Paris-aligned benchmarks, so it's very easy. Then you have Article 9.1, which essentially is anyone that invests with a benchmark, but not with a climate objective, because if you invest with a climate objective, you need to use Paris-aligned benchmark. So if you invest with a non-climate objective, but a benchmark, you're 9.1. If you invest off benchmark, some sort of hedge fund or possibly a private equity fund, then you're 9.2. So in essence, they are very compatible with Article 9. And Article 9, I would strongly recommend to read the actual legislation. It's only Article 9.1 to Article 9.5. It's a 5-minute read. It's definitely not only focused on some sort of venture cap. In fact, the venture cap fund might sometimes find it a bit tricky because you have to be 100% sustainable investment definition, which is for VC funds not always easy.
Wonderful, thank you. That's the only question thus far, but I am sure there will be more. I think there is more actually popping up now.
Yeah, I saw the first one. So the Paris-aligned benchmark, the climate transition benchmark interact with each other very easily. So you can choose either of them. Normally, those that are comfortable with exclusions and comfortable with the minus 50% decarbonization will start with the PAB. Those that are not comfortable either with the exclusions or the minus 50%, they start with the CTB. Obviously, these are minimum requirements, so you can put all sort of things on top. So you could have a CTB that starts at minus 30, but still excludes fossil fuels in the same way. It is very much allowed for everybody to design their own versions on top of these minimum requirements. So all of these benchmarks are nothing else than a standard which many market participants exceed. So pretty much any index provider that offers these benchmarks will have their own customizations on top. Some people include scope 3 from the beginning for everything. Some people do not a -7%, but a -10%. Some people overlay all sorts of other things. So normally speaking, these are minimum standards which you can customize and innovate beyond. And that allows a lot of flexibility and creativity in the market. Pretty much all the large asset managers offer Paris-aligned benchmark versions, not only in Europe, but even in the US. There is one very large asset manager that offers them in the US, not under the Paris-aligned name, but the same recipe, just different name. So in essence, this is really a recipe. Think of it as a recipe how to make a tasty dish that gets you towards Paris, but you can sprinkle it and spice it as you like. And you can slightly overcook it or slightly undercook it, whatever your clients or your partners like.
Thank you very much. I think we have some additional ones as well. How can an issuer be considered aligned with the emission reduction trajectory? Is this relative decarbonization forward-looking or backward-looking? Is GHG emissions reduction by each listed security estimated or actually realized?
So very important. This is for investors. This is not for issuers. So the issuer will be considered if the investor thinks that the issue is suitable and the issuer is not under the exclusion. So the only time that the issuer is directly tackled would be under the exclusions. Everything else is for investors. So investors need to reduce their portfolio 7% year on year. The issuers can obviously help with that. So if you're an issuer that is relatively reducing your emissions, the actual emissions by 7% in a given year, or even more, then you're very likely in because you help the investor to do this. If you're an issuer that only reduces by 3 or 5%, you're probably still in because it's a valuable contribution, and especially if your overall intensity is low, then the investor might prefer you over someone with a higher intensity. If, however, you are claiming to be a very sustainable company, but you may be on average increasing your emissions 20% year on year, then it's going to get tricky, right? So it's fairly easy nowadays to take statements of CEO and CFO who claim to be very sustainable and then look at the absolute emissions and they're actually increasing year on year, then it gets very tricky. So it's very much a forward-looking measure because it's the most recent emission trajectory. So it's what actually happens to the emissions rather than the lip service that an issuer gives. It's very important for us always to use measures that are actual evidenced, not measures that are potentially just happy daydreams, and then you have one Shell CEO and then a new Shell CEO comes in and the dreams are massively changing. So it is all about evidence measures, not lip service, but it's very much about evidenced forward-looking measures. So the 7% here is the trajectory. That's what we're looking for, people who decline in emissions, not people who increase. And issuers can participate here quite easily or help their investors by actually reducing their greenhouse gas emissions divided by value, or even better, reduce their absolute emissions.
Fantastic. Thank you very much. I think there's one last question if you'd like to take it now, or we can leave it for
Sure. Let's do one more.
Sure. So from a practical perspective, Andre is asking, are these climate benchmarks also used as reference points for certain industries, such as credit institutions for their decarbonization strategies?
Now, Andre, you're talking to a financial data scientist. The word industry always makes me feel uncomfortable because the question is who decides what the industry is, right? Sustainability has a lot of somewhat related definitions. Industries have very wide definitions, and quite often one company is put into one bucket, and that basically isn't true at all. So we don't like to think that much about industries, we think more about activities. So if you had one business unit that traded in a pure activity, so basically you think about a pure play company. Let's say every company was pure play, or every company was basically split up so that you had pure play business units. Then you can actually analyze it properly. So, and we are very much right now actually working on this in our third group in the platform to have an imperative of pure play analysis, not mix-up analysis. So at that stage, you can certainly, for quite a few activities, use the 7% of the guidepost. The 7% is from the IPCC. So everyone really should be making the 7% target. There's very, very little activities that can be excused from that 7% target. Maybe agriculture in my personal view, but otherwise everybody should be able to decline and aiming to decline 7% year on year. And so that's in essence the overall IPCC science. And so you can use it, but I would strongly recommend to use it for activities rather than for industries, because the idea that one, especially large company, is in just one industry is frankly ludicrous. It's not real. And so the industry classification systems that pretend that, or the industry classification systems where companies can just go online and switch their code any day, are not particularly suitable. We really have to look at what activities are the companies trading and how do these activities contribute to climate change mitigation or contribute to the worsening of climate change. And then the companies may absolutely want to reflect which activities they want to invest in the future and which activities they might either want to divest or kind of reduce in effort and so forth. So I think it's hugely important to differentiate between pure play activities and industries, which are unfortunately just a mix of all sorts of things that is very hard to analyze accurately.
Thank you. And one last one, because I think it ties very nicely to your previous point. So Giovanni is asking whether reduced GHG emissions of investors are measured in terms of financial emissions then, of financed emissions. So essentially, how do you talk about portfolio decarbonization?
So the answer is broadly yes. Follow up on LinkedIn if you want a more detailed answer. So where the firm that is invested is a bank, definitely their financed emissions are included. The overall relationship of Paris-aligned benchmarks to PCAF's financed emissions is very close. As soon as these Paris-aligned benchmarks came out, PCAF basically called us up. And we had a couple of calls, and they were the ones that immediately used the IVIC here. So the enterprise value, including cash, became quite famous. We invented it, but PCAF definitely were the one pushing it out in the world and made it quite well known. So in essence, there's very close relationships, but to give you a very detailed answer, one would have to look at, are we talking about the index? Who is the investor here? Who is the investee company and so forth? But so in principle, the relationship is pretty close.
Fantastic. We do have more questions, but I think maybe we should continue with the presentation and then we can continue the conversation so that we at least don't miss the slides.
I stop for questions so that people can ask questions. This has been excellent. I love the question. That's really why we're doing this here, to get feedback. Please do feel free to reach out on LinkedIn, ask questions, add me. Obviously, I have little idea who I'm speaking to here, but it would be very much appreciated if people reach out on LinkedIn and ask further questions. That's exactly why we're doing it. We're doing this so that people have an accurate understanding of what's going on. There is no misunderstandings, either random misunderstandings, or we're also aware that certain lobbyists deliberately create misunderstandings. Obviously, that's very immoral to do, but unfortunately it does happen. So we're trying to work against all misunderstandings. And when it comes to SFDR, by the way, please do read Article 8 and Article 9 yourself. That's a 5-minute read for both of them. They'll give you a lot more information than listening to a lobbyist. So what do we have here? We have two climate imperatives for the taxonomy-aligning benchmarks. We have the IPCC's 1.5 degree. Notably, this is limited or high overshoot rather than no or limited overshoot, given that simply we won't be able to decarbonize at the same pace. And we have green capital expenditures, and this is our key transition metric. Green capital expenditures is a beautiful metric. It's last fiscal year's capital expenditures. That means as a capital expenditure, it's forward-looking. It's money that's invested to change the world. Hopefully, if it's green for sure, otherwise maybe not. But at the same time, it's last fiscal year, so it has been audited, it has been spent. It's not a promise that a company can walk back, right? So we're quite allergic to any forward-looking promises that could be immediately taken back. We need something that is evidence. We need something that is meaningful rather than just lip service. And green capex is perfect here. So it's actually evidence and it is forward-looking. And so the next thing is we take that green capex and we aim to increase the green capex ratio 5 percentage points year on year. So 2, 7, 12, 17, 22, and so forth. At a global level, in Europe, we're already further. We would start about 12% here, so 12%, 17, 22, and so forth. And That allows the benchmark to really invest in greening the economy. Take the example. We did Paris-aligned benchmarks. It's all about decarbonization. Then people will say, okay, but what if I put all my money in a wind park, or I put all my money in a solar farm? Does that not then mean that I should get some credit because I'm greening the grid? And obviously, if we don't get green grids, then ideas like green hydrogen don't work. And yes, in the taxonomy-aligning benchmark, you get credit for that. So the moment that you put 100% of your capex in green, and that is a meaningful amount, not just one wind turbine, but a whole wind park, then you basically do not have to decarbonize at the point in time. So you have to decarbonize 7%, but with 100% green capex in that particular year, you only have to decarbonize 0%. If you had 50% green capex in that particular year, you had to decarbonize 3.5%. So there's a direct trade-off. Basically, if you have 0% green capex, you decarbonize 7%. If you have 50% green capex, you decarbonize 3.5. If you have 100% green capex, you decarbonize 0, and so forth. So hypothetically, if you had 90% green capex, you decarbonize 0.7%. So we automatically bring both objectives together to decarbonize, which is the number one imperative of the Paris Agreement. And the number two imperative is to essentially green the economy. Without greening, we're not going to win the ballot box, so we'll get problems with the overall decarbonization. And so that, in essence, is really the opportunity. Now, there is one catch. Green capex is a relative ratio. So you could have a consulting company, let's say Accenture in Dublin. I'm based in Dublin, so it gives you a reference point. Nice company, but they could decide that they would have one or two or three wind turbines outside the building that they own. Then technically speaking, 100% of their capex is going to be green, but the capex has nothing to do with their business really, and it's a minuscule amount to the overall Accenture. So in that sense, we require for capex to be credited, so for your green capex ratio to count, we require that your nominal capex is 1% of the value of the security you invest in. So if I invest in a stock and I invest 1 billion in a stock, and the company has, or the market cap of the company is 1 billion, and the capex attributable to equity is 100 million, then I would have 10% capex to price ratio. With that capex to price ratio, I would be perfectly fine. We're requiring the capex to price ratio to be larger than 1% for the security you actually invest in. Then we continue to have a 7% decarbonization, same as in the Paris-aligned benchmarks, but you get a decarbonization holiday if you have 100% green capex, and you get a proportional decarbonization holiday if you have 50% green capex. You only have to decarbonize 3.5%. Notably, the latest launch year where the 7% rate is allowed is 2023, which means if you want to launch in 2025, you have to actually already basically decarbonize notionally from 2023 to 2025. You can do it, but you'll have a bit of an initial decarbonization. So we're saying 7% from 2023 as the latest notional launch year. Then we have the equity allocation constraint, same as in the Paris-aligned benchmark. In this case, it applies to capex securities. So the proportion of securities that are capex securities, which are defined as having more than 1% capex to price ratio, should be the same as in the overall universe. And then we have the exclusions, which so far was the biggest discussions as usual. So we have the TAP X in the bottom row, that is taxonomy-aligning benchmarks with exclusions. And we have the TAP, and the TAP has no exclusion. And the exclusions in this case, there is no utility exclusion, but there's a coal, oil, and gas exclusion. And the coal exclusion is more than 1% revenue and more than 1% capex in coal. That gets you out. And it's an end. So basically, you're in as long as you're lower than the 1% threshold in one of the two. More than 10% oil revenue and more than 10% oil capex gets you out. More than 50% gas revenue and more than 50% gas capex gets you out. So in essence, even companies with heavy gas, as long as they are less than 50% of the capex for gas, they're in. Same on oil. It can be heavy on oil revenues, but if you actually invest elsewhere in the future, you're in. Now, you have to demonstrate that yourself. We don't allow anybody to estimate your percentage of capex. You have to disclose disaggregated capex as a company. If you disclose that you have less than 10% capex. So if you don't, the precautionary principle applies and assume that you don't have it. So you have to have it disclosed in order to report. And so that is key here, but allows any company, any issuer that wants to make it in to actually make sure that its capital expenditures are not heavily brown, and they will actually be in a taxonomy-aligning transition benchmark. There's one further final point to make, which is that in the TAP, so that is the lighter one of the two benchmarks, both of which target high overshoot, the TAP certainly high, possibly very high overshoot, that in the TAP, 2.5% of the 5 percentage points green capex increase can originate from an estimation where the agency estimates that one do not significant harm criteria is not fulfilled. We do know that do not significant harm criteria are pretty complicated. So in essence, if one do not significant harm criteria is missed, then for half of the 5 percentage points increase, that may be okay.
Andreas, can I just ask, somebody has asked a question directly linked to this particular slide. So on the activity exclusion, you have CAPEX and then there's 3 asterisks, and somebody's asking, well, what does that actually refer to?
It refers to here on the side. If CAPEX is not reported by activity, the precautionary principle applies. This means you are deemed to have failed it unless the issuer reports the CAPEX per activity itself. Perfect. But that means that if the issuer, that really is an offering to any issuer, if you want to be in a taxonomy aligning benchmark, even the one with exclusions, you need to report that your CAPEX, your capital expenditures for heavily brown activities such as gas, oil, and coal is below that threshold.
Perfect, all clear.
That is the way that taxonomy-aligning benchmarks work. I'll do one more slide before we come into questions. So in essence, in addition to the decarbonization trajectory that goes from the upper left to the lower right here, that we have in Paris-aligned benchmark, we now also have an increasing trajectory on green capex, which goes from, globally speaking, around 2%, hopefully to 100% between 2040 and 2045.
Great. So is that the end of the presentation, correct?
Yes, I would be very happy to take questions now.
Great. Well, I think they are coming in. So I think there's one interesting question that I think we should tackle first, and then we can also talk about the joint venture questions because they seem to be of great concern. So Purusharth has a question. Won't it be better to look at emission intensity factor instead of absolute emissions? A company naturally wants to increase revenue and not stop it just because emissions will increase. So
we are looking at the emission intensities in the equity for sure. So that is emissions divided by value. So that's the value intensity as an investor would look at it. So you can decrease that either by decreasing your emissions or by increasing your value a lot further than benchmark. And in fixed income, so where it's direct financing, we're looking at either intensity or absolute emissions. Notably, the Paris-aligned benchmark is on absolute emissions, not on intensities. So if you actually want to follow the Paris Agreement, you have to work on absolute emissions, not on intensities. Companies can easily do that. They can grow value, which is of course paramount for the investors, more important than revenues itself. So they can grow value by, for instance, going into activities that deliver a lot more value for emissions, leaving behind those activities that are pretty valueless for the emissions they develop. So revenue isn't really key here. It's value that is key, obviously, for an investor. Investor doesn't get anything from revenue really. And companies can easily grow that even with absolute emissions. But we have both intensities and absolute emissions, and on the equity benchmarks, it is intensities anyway.
Fantastic, thank you. I think there's a couple of questions that have the same thematic, and it's about not just about the portfolio company's absolute emissions, but also how much this company and its essentially work contributes to emission reductions in the market or other industries. So the so-called enabling companies. So, for example, through their products, technologies, etc. So, what do we do about these enablers that often don't sit very easily into the frameworks, purely because they have some downstream, upstream effects that are harder to capture?
It's fairly easy here. So if the enablers are recognized in the green taxonomy and they have sufficient capex, then they will be as green in their capex as a wind park or a solar farm. So, and also keep in mind, right now, the data on the green capex is pretty much climate change mitigation or climate change adaptation capex. But as soon as the data comes through on biodiversity, on water, on pollution prevention, on circular economy, that will also be counted. So in essence, this is green capex on anything the taxonomy recognizes as green capex. That doesn't matter if you're a pure player or an enabler, so we have covered them here. It is really incentivizing to actually make the effort as an issuer to have green taxonomy capex. For non-European issuers, at least get as far that you are basically compliant, except for one do no significant harm criteria. We do understand that for non-European issuers, sometimes the do no significant harm criteria although one can sometimes be quite hard because some European regulation that's not really relevant for you. So for non-European issuers, at least get to the level that you're compliant with substantial contribution, minimum social safeguards, and all the NSH except for one. Ideally, of course, be compliant with everything, but if you can't get there, then at least get as close as possible.
Fantastic. So we also have an interesting question from Ambra. Why 5% for capex alignment for a year? This cannot be progressive. 3% for the first 3 years, 7% later on. So how does that work?
So the 5 percentage points linear per annum on green capex increase for the portfolio. Keep in mind that's the portfolio, not the company, right? Is very much driven by 2 points. So we need to reach 100% green capex well before 2050. Otherwise, it doesn't make sense from a net zero perspective. At the same time, it needs to be logical, and the number needs to be easily communicatable. Like the 7%, we have a 5%, the number needs to rise, it needs to be ambitious. Now, if you speak with some scientists, they tell you we want 100% green capex by 2030. Now, that would be somewhat too steep, but we have looked at the actual numbers, but the actual numbers are out since Q2, and you have companies that are having green revenues of 13% and green capex of 83%. Keep in mind, we're only focusing on capex here, not on revenue and OPEX. And capex is your management team's own decision. They can decide about 100% green capex. They can decide that any day, and it's 100% green capex. It does not necessarily even mean increasing the green capex. It just means reducing the non-green capex will also get you to 100% green. So in many ways, if a management team says, I got 5 billion green capex, whatever, renewable energy and so forth, I can't see a business case for increasing this. They can be 100% green capex by just not doing the non-green, i.e. in most cases, the very brown capex. That will also get them up, right? So it's really incentives for management teams to take a hard look and ask themselves, are we needing to run those activities that are heavily problematic from a climate change mitigation perspective, or are we maybe divesting them into other companies that have higher cost of debt, or maybe even closing them down? So from a transition perspective, it's important to highlight that it is key for those activities that are problematic to either be closed down or gradually be moved into areas with higher cost of debt. So from public markets into private markets, from private markets, decent credit rating to private markets, crappy credit rating, and so forth. So, and that remains the case. We need to transition and we need to incentivize greening the grid, greening the capital expenditures, but likewise disincentivize continuing with the activities that worsen climate change every year.
Okay, we are now having a lot more questions coming in, so I think this is a positive development. So there is a question from Katie. I'll go in certain order. What is the rationale for a lower decarbonization rate if there's positive green capex? Why not require both to ensure Paris alignment?
That is a great question, Katie. And the honest answer is you can easily require both. This is a minimum standard. So we had a lot of asset owners ask us to not start at -30. They wanted to start at ±0. The Net Zero Asset Owner Alliance even has written a paper on that. Can we please start at ±0? -30 is too steep. So we basically are responding to market feedback to start it, or to allow starting at ±0. That doesn't mean that Katie's company can either do a TAP taxonomy-aligning benchmark that starts at -30, or she could do a PAP or a CTB and just put the CAPEX mechanism on top. So in essence, the reason why we are permitting this is because obviously when you give a decarbonization holiday, you are slowing down decarbonization. That's obvious. At the same time, we get the clear feedback from the market that, look, if I put all my CAPEX into green, then I'm building something new. I can't be asked to reduce emissions strongly at that point. You need to give me a bit of a slack here. So that's what we're doing, decarbonization holiday. And at the same time, other parts of the market, or the same parts in some cases, have said, guys, -30 is just too hard for us. We don't get that through our committees, through our processes. Please, let's start at ±0. And so in essence, no one is forced to decarbonize slower, but if you feel that you need to, because you're greening your CAPEX, you are allowed to do that.
Awesome. So Roland has an interesting question. He's actually asking about your data sources. So where can I find the relevant data? So the data source. Is this just for equity? What about fixed income? And how can I bring equity and fixed income in line? For example, in a multi-asset context.
Yeah, that's straightforward. So first, the data sources are with the issuers. There's 1,968 issuers, if I remember correctly, that already have to report on the green taxonomy. 300 of which are a bit naughty, but we have 1,600 roughly that have reported on the green taxonomy. That means reported doesn't necessarily mean reported a value that is larger than 0. We have about 700, 800 that reported green CAPEX values larger than 0. There's a whole range of data providers that provide you a curated data set, but you don't have to wait for that. You can also just go to the website of the companies and look at the numbers themselves. They're all there. They can be monitored. They can be taken. They can be read from the website. So in essence, the reporting is there. The first set of reporting came in Q2 of last year. So that allowed us to basically proceed with the benchmark development. There's reporting for companies outside EU, UK, Swiss, American, Canadian, Mexican, Chilean, South African, some Asian countries. Companies do also in some cases report the taxonomy. And if you're looking for estimations for the TAP, where then of course there is the standard vendors. We have run a taxonomy vendor survey, which you can find on my SSRN profile, where we have reviewed the vendors that were able at that point to provide data, and we're likely going to do another vendor survey. So there is plenty of data right now that can either be sourced via vendors or directly from the issuers.
Wonderful. There's a very interesting and quite, so I'll ask you two questions. So, because we need to speed up, we don't have that much time left. So Lucas has a question about green CAPEX. So are green CAPEX defined as CAPEX of economic activities that are within the EU taxonomy? So if you can get a short answer to this one. Exactly. And then Ben has a longer question. Will there be an alignment on the emission factors available to companies? According to some research, there could be a 10 times difference in carbon equivalent calculations depending on the emission factors used. Which set of emission factors would you recommend that companies use?
Actually, let's go one back to Lucas. So green CAPEX is CAPEX as taxonomy aligned. Not only the activities. You have to be the activities, you have to have substantial contribution, minimum social safeguards, and do no significant harm. So in essence, it's full taxonomy alignment. And on the TAPEX and on the TAP, it is possibly excluding one DNSH. So I think we need to be very clear that it's full taxonomy alignment, not just the right activity. Depends on how the question was asked. I think that's important to clarify. So emission factors for activities is a hugely important topic, in particular for Scope 3. Anyone who's interested is very much welcome to reach out. We're working on very detailed Scope 3 processes there. The first point is to break a company down into activities. not take the sector code. Like, that is really very, very simplistic. Please do not just take sector codes and believe that one company, one sector. That's not the world as it's out there. So you need to look at the activities, then you need to look at the emission factors of the individual activities, and 10 times is actually quite generous. Depending on research, can be easily more than that. So that is where the precautionary principle comes in. So you effectively look at corporate self-reported emissions, scope 1, 2, and 3. In scope 3, you look at, are they reporting the right categories, or they're reporting whatever employee commute. In 3, there is a couple of categories that are key. FTSE has a recent paper highlighting the top 2 categories, but you probably want to look at the top 5, top 8 categories, depending on the activity. And then for the activities, you would want to estimate with precautionary principle what is the correct number across all the scopes, and make sure that you basically split companies in 3 types. Does not report, reports inaccurate, reports accurate. And then does not report needs to be overestimated considerably, reports inaccurate needs to be overestimated somewhat, and reports accurate, you take the number they report. Now, there's wider complications on emissions reporting these days. I might just say 2 obvious ones, and then people can follow up on LinkedIn. And it's across all 3 scopes. So on scope 1, unfortunately, companies are trying to play a trick with the operational control. They basically say that they have financial control, but not operational control. Then suddenly, if they report operational control, some of their own emissions are out. So the companies transform themselves into holding companies and declare subsidiaries as scope 3. That's a very naughty trick. We are seeing this. So I would certainly not recommend to do this, but some companies are playing that trick. On scope 2, market-based is a great idea. It works very well if you have proper purchase power agreements. Some companies get very funny structures or scope 2 and then even report 0 scope 2 for like things that are avoided emissions South Pole style. That's highly dangerous, I'd say. So I think I would be very, very careful. Avoided emissions are not counted at all anywhere in this concept. So that's not in there. If you want to reduce your scope 3, you really have to report a proper purchase power agreement, ideally in the same grid that you're actually taking the energy from. So from a data science perspective, all of these tricks are, not all of them, can't say we see all of them, but we probably see a lot of them. And a lot of these tricks in emissions accounting are going on. Corporate restatements of emission numbers is another huge issue. And that's why it's hugely important for every user of the carbon data to basically spend some time and when needed, estimate a number that has been reported with the precautionary principle. I can't stress enough how important the precautionary principle is. We have it from the EU perspective in the taxonomy legislation, in the benchmarks legislation, in SFDR, everywhere. So if in doubt, err on the side of the planet, do not err on the side of commerce.
Thank you. That's a very good, strong message there about putting the planet first. We have actually 2 questions that are linked to the transition, which I think is of great concern to certain geographies and sectors. So Jane is asking, given the taxonomy only defines what is considered green, then how can the investor see the revenue and capex split of coal and oil for the exclusions? And are they to rely on what the IFRS segment split makes this segregation? So pretty much relying that.
Yeah, that's a very good question. So the company themselves can very much disclose the capex split if they want. Some are doing it, not that many. The revenue split is normally reasonably well disclosed and or estimated by the likes of Factor, Infinity, Bloomberg in their revenue data sets. So on the revenue side, the actual split is fairly easy to determine from the aggregation of the capex. Is much harder and is very much more at the discretion of the company to actually disclose capex. Obviously, that is hugely important. Let me say, it's quite obvious that certain oil and gas companies have 99% of the marketing budget targeted green activities and less than 5% of the capex. Sometimes less than 1% of the capex. I mean, that's greenwashing pure, right? Your marketing is all about being green, and your future investment is nothing about being green. Now, it's very good with the green taxonomy capex to see companies that have 83% green capex, but only 13% green revenue, right? That's a company that really wishes to transition. But with green capex of last fiscal year, that means it's for real. the company's management team has put billions behind it on the green side and has not put billions on the non-green side / brown side. And we all would have seen what's currently happening in Shell, where a previous CEO made the right noise, the current CEO very much the wrong noise, is happy to worsen the climate change crisis, not really taking climate change mitigation serious. So in that sense, I think it is paramount here that we are looking at the actual measures that matter. So that would be last fiscal year's CapEx in the first place. Is there even enough CapEx or not? And then, of course, the greenness last fiscal year's CapEx is paramount. Did I fully catch the question, or was there a second one in there? I'm just thinking.
No, I think that answers it quite well. I think it all ties together quite nicely. There's also an interesting question about the tabs needing EU legislation. So would tabs need EU legislation like CTBs and PABs, or could it be adopted without? So it's all about the benchmarking legislation.
Benchmark legislation at some point is very likely to come. Obviously, there's election. No one knows exactly what the election results are, but I would expect it after the election. That said, the PABs were built by the first administrators well before the legislation came in. And likewise, there was already administrators building the tabs based just on the draft report. So I think it will be adopted ahead of the legislation. That's simply commercially clever. And legislation in an election year will always follow afterwards.
Fantastic. Thank you. I think Alejandro has a very interesting question that we haven't touched upon. So what will happen with the sectors that are actually excluded from delegated acts, but there is expert knowledge about what is more or less green? Are these sectors unavailable to perform better or greener from the CAPEX perspective? So what do we do with the ones not covered?
Yeah, so who is covered or not yet covered in taxonomy is not a matter of taxonomy-aligning benchmarks. Taxonomy-aligning benchmarks use the taxonomy as it is. So in essence, if the taxonomy changes its view on sector inclusion, if the taxonomy changes its view on thresholds, the TAPEX and the TAP will simply follow. So at this stage, what we're basically saying is, if you have green CapEx by the taxonomy, then you can be rewarded on the CapEx side. If you are a sector that is not covered, you can obviously decarbonize like anyone else. So the benchmarks are for all the sectors, right? Every light sector that doesn't have any CapEx, just decarbonizes like they would do in the past. So this is very important to say. This is a benchmark that is not only for companies that are eligible to the taxonomy or sectors that are, it is for any company. A part of the companies will just decarbonize, whatever, your consulting firm, and another part that will actually be able to decarbonize, but at the same time green their CapEx and then get a decarbonization holiday while green. So everybody is welcome, every single activity, including agencies and so forth in the fixed income space. If they're going to get a green CapEx decarbonization holiday, it really depends on if they have sufficient CapEx to price. And so that would be some sectors where there isn't CapEx, and that would also be some companies where the price is so ridiculously high these days that basically investing in an equity just essentially means buying 99% goodwill. So it's very much depending on the CapEx to price ratio that essentially matters. And as the taxonomy develops, the TAPEX will automatically update with the taxonomy.
Fantastic, thank you. There's a broader question from Katie, which I think you already did touch upon, but Katie's question was, with the success of the Paris-aligned benchmarks, have you seen any evidence that issuers are starting to think about index inclusion as relevant to their strategies? So as it happened with Nikkei 400, do you have expectations of this happening eventually for TBBs?
It's already happening. So, I mean, issuers have pretty much for decades thought about inclusion in Dow Jones Sustainability Index as a relevant structure. I'm pretty sure that some issuers that are regularly in PABs are proud of this. Likewise, I know that issuers that are not in PABs are not proud of it, trying to get in. So I think it's already happening. Obviously, there's not just one PAB, right? So there's 50, 60 PABs. You may be in one and you may not be in another. You may be eligible for all of them, but some benchmark trader doesn't put you in because they simply don't like your financial numbers or they don't trust your ability to reduce emissions. So in essence, If you want to know which paths you're in, it's fairly easy. You go to the index providers, you look at the ETFs, you see are you in the ETF or not. And this is something you can definitely claim as an issuer as a success. You can put on your website. You will not even have to pay a fee because it's not some sort of label or a seal or service like some of the other stuff. Yeah, you'll probably be in there if you're a reasonably reducing company that at the same time is in the major universes. Obviously, some companies just be too small; they're not in there because they wouldn't be in the parent universe. But so in principle, issuers certainly are taking interest, although it's of course not directly for them, right? So apart from the CDB, it doesn't directly relate to issuers. It relates to asset owners, index providers, investors. But I have seen issuers that take pride in being included, and I have seen issuers wondering if they could be included.
Thank you. We have 4 minutes left. So before we jump to the one or two last questions, there's also some interesting points in the chat. Luckily, the chat does get saved, so we can also address them later or even tonight when we actually have a second webinar. So this is very unusual. Andreas has been extremely generous with his time. People usually aren't. I'm just warning you. So as a platform member, he has also committed to do another webinar at 6 p.m. Central Europe time, or 5 p.m. London time. So I think that's very welcome. So maybe if you think of another question or something else that you'd like to ask, you're more than welcome to join us again. And a quick note, Andreas kept mentioning that, you can reach out to him on LinkedIn. So here are all the details for us on LinkedIn, including also the platform's official LinkedIn page, which will have also updates and potentially additional opportunities to interact with not just Andreas, but also the other platform members eventually. So I've put it in the chat. So please follow the pages, reach out, etc. And any feedback that you have, of course, on what kind of content you would like to hear or see from the platform is very welcome, since we want to really make sure that our work is understood and yes, we engage with the market. So just to jump on a quick last question that ties to your last answer about the parent companies. So for corporates that use sole purpose financial vehicles to issue debt, should we use the data from the issuer or the top parent? So it's the subsidiary question.
Yeah. So let me put out 2 points first. So in the platform, we have a data science hub, which I had, and there was a lot of people looking at data questions. So please, any data question, bring them our way. We are probably already working on it. If not, we're either able to answer because we already worked on it, or we'll pick it up as a further thing to sort out. It is of paramount importance to understand corporate structures. So to actually understand corporate structures, how they relate to each other, is hugely important. Let me take Liberty Media as an example. Liberty Media is a media company that issues bonds, that as a media company has relatively low emissions, that has a baseball team that probably has relatively high travel emissions, but it also owns Formula One. That has a lot of emissions. So in essence, you can have companies that are vastly different, and assessing them as one company, frankly, does not make sense. Berkshire Hathaway, Warren Buffett's investment company, literally owns a renewable energy business, a gas business, and a coal business, and an underwear business, and an insurance, and it's a mini economy essentially in one company. Putting one emission factor on that makes absolutely no sense. So to go into detail and actually be able to see which emissions to use is hugely important. Couldn't be underestimated how important that is, which means to come to the question, when you're looking at your financing entity, it depends who they're financing. If they have a green bond program that's only for the renewable energy business, then it's going to be different than if they have a green bond program that's for all the businesses. And so there is no ring fencing there between the business and this second green bond program and so forth. So it's hugely important to understand, where does the purpose of proceed go? Is ring fencing actually applicable at the legal entity level? Let's be honest, ring fencing at the account level doesn't work at all, but ring fencing at the legal entity level could work. And so it is hugely important to understand who you're dealing with, which subsidiary, what are the structures. And in fixed income, that's obvious. In equities, I think it's becoming more and more that people realize that they have to really understand which subsidiary am I dealing with. And Liberty Media and Berkshire Hathaway are just two examples of companies that are extremely complicated. There's many, many more. And so it's not just one company. It's one logo, yes, but otherwise it's enormous amounts of activities. And within listed universes, I would struggle to think of a single company that's actually genuinely pure play and does not, from a green perspective, touch more than one activity. It's very hard to think of them that are genuinely pure play. So having that understanding would be crucial. As said, please feel free to reach out. There is ways to deal with that, such as legal entity identifiers. And so, very happy to discuss further. And if you want a second run, Linda and me will be back in 8 hours.
Exactly. So
to allow the American market.
Have a nice day. Remember that it's actually a very welcome thing if you reach out. So you have the links, you can find us. And if you have burning questions, other things you think of, please do join us in the evening. And we look forward to seeing you also at other webinars and events that the platform will organize in the future. And thank you so much, Andreas. It's been fantastic. And thank you for dedicating your time and also for having very comprehensive answers. It's been very, very interesting.
It's all about the Q&A. That's why we're here.
It's the best part.
You could watch the video and just see me talk about Slack. Thank you very much. Bye-bye.
Thank you. See you later. Bye-bye. Okay.